Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucy, and some of you know me as Triangle Investor from X. I would like to welcome Joe Kelly from Uranium Markets to my show. Joe, welcome. Nice to have you here.
I am so happy that you've invited me back again. I really love talking about uranium, especially with you, because you have a very intellectual approach to the discussion of uranium. So I really enjoy chatting with you.
Thank you very much, Joe. Just a reminder, Uranium Markets is a full-service nuclear fuels brokerage desk delivering creative solutions worldwide. Please expand a bit on your business. What are you doing over there? Tell us a bit more, please, Joe.
Well, exactly what we do is we actually match buyers and sellers together, more of an exchange. We spend a lot of time working on the U308, the yellow cake component, but we also broker conversion. Conversion right now is at a much higher than it's been for a very long time. I remember the days of people selling UF6, and they would include the conversion at little to no cost just to move the uranium component. Now we did a deal just the other day at $67 per kgu of conversion. So we do conversion. We do SWU, separate of work units, which is the enrichment component, the cost of or the process of enriching uranium. We broker that, create a bid offer spread, match buyers and sellers together on that. And we also do some EUP. Occasionally we'll broker an EUP deal, which is all the components, the U308, the conversion, and the SWU all combined into one package. And sometimes we have people that are long that looking to sell it, and other people that happen to need just that component, and we match that up too. So that's basically what we do. Part of the byproduct of what we do when we match these buyers and sellers up or create the bid offer spread is create transparency and liquidity. And the marketplace craves transparency and liquidity. We do that on a real-time basis. So that's the value we add to the market.
Excellent. Joe, there is no better time to have you in my show since we are witnessing correction in the uranium equity markets. And there are a lot of people out there wondering, is this a fundamental thing or something else? You have a great perspective as a broker since you are seeing both sides in your business, the uranium buyers and sellers. I want to hear your opinion. How is the current situation on the spot market in the terms of volumes and sentiment?
Well, there's a couple of things I'd like to point out. I know I've listened to some guests on your show talk about the dysfunctionality of the spot market. Well, it's not necessarily dysfunctional. It's just it's relatively illiquid, and we trade in big blocks. So our usual transaction size is 100,000 pounds. Now, 100,000 pounds at the price of which we did a deal today at $82 per pound, well, that's $8.2 million for a single transaction. So for market participants to buy and sell uranium, it's a major commitment to cash. And it's a major decision when selling uranium to take that amount of cash, because it could go higher and lower or higher or lower in a short period of time. So we don't have a very high deal frequency because of the size of trades, but each transaction tells a story. And we try to live in the world that actually translate that story into a real-time price based on transactions, based on bids, based on offers, and based on information we gather from the very neutral position we hold. So we hear from nuclear power plant analysts on where they think production will be, how much production's out there, whether there's a shortage or not a shortage of uranium. And we hear from very excited producers at these price points that are very happy to begin their operations and start selling some of the uranium out to these power plants. So as you pointed out, our perspective is quite unique. You often have guests on the show that are supporting the investment side of things because they're from the production side, and they have to stimulate the capital markets for them to raise enough money to perform the mining operations they need to do. You often bring investors on, which basically investors inherently buy uranium or buy the components, and they buy it for reasons of profit. They buy it to make money on it. So their perspective would be, a reason to buy it would be that they're rather bullish. So they often tell the bullish tale in order to reflect why they invested in uranium. And a lot of these experts, they do a lot of work. I do little work on analytics. What I do is I analyze everyone else's work and try to aggregate that together and decide really a consensus on where the price of uranium should be. And right now I mentioned the price of uranium traded today at $82. Well, guess what the price of uranium is?
Yeah,
$82.
$82. Yeah, exactly. Joe, are you seeing some signs of fear between market participants about the possible recession and market meltdown? Or would you say it's pretty much business as usual?
Well, I'd say that's premature because the uranium market traditionally slowly reacts to current information. They like to sit back, digest all of the factors. No real market trades off of the uranium market. It trades in a world of its own, so therefore it can digest all the information without knee-jerk reactions. So this information, this macro information about economic future, about recessions, and about soft landings and hard landings, well, that's too current for really the uranium market to absorb it, process it, and implement it. So I'm not sure we've seen any of that yet, but basically we're seeing oscillating markets. We're seeing markets go up, down a little bit and go down a little bit based on range trading because the market wants to seek out where the true price is. In these prices, we feel that lots of production seems to be, or new production seems to be happy with the pricing. I've been to conferences and the production side is a lot happier than they were when it was $26 a pound. They aspired one day to be in the 80s for basically creating profit. And they've been telling the capital markets for years that it will get there. And it did get there. Is it $89? Is it $75? Is it $106? Well, what's the sweet spot of pricing that'll help bring on this production that will make sure that there's plenty of uranium for the power plants to operate effectively and create or generate electricity for the many millions of consumers?
Mm-hmm. Yeah, Joe, we witnessed the pullback. That's a fact. From $108 to $82, it's a pullback. But what do you think? What is behind that pullback? It's like I'm preaching all the way. It has nothing to do with fundamentals. But what is the reason for that kind of pullback?
Well, I'm going to make obvious statements, but there's more to the obvious statement that I made that I come up with this evaluation. Basically, at the time, $106 a pound was too expensive. And how do I determine it was too expensive? Because when it hit that point, it came down and there was more sellers than there were buyers. So basically $106 at the time, I'm not saying the future is not going to be 106 or more. I'm saying at that time when it reached $106 a pound, the marketplace felt that was too high. So the natural forces, the market forces, supply came into the market and brought the market down to where we are today at $82. Now, is $82 cheap? The market forces will determine that. Demand will come in. We'll hear people tell stories about how $82 is very cheap. Well, $82 is not cheap right now because it traded at $82. And we didn't have a bevy, a variety, a huge number of buyers come in at $82. We didn't have a huge number of sellers come in at $82. We have buyers at lower levels. We have sellers at higher levels. $82 is where we had a buyer and a seller meet. So that's the price it is today. Many talk about it going to $200 a pound. Well, if they truly believe it's going to go to $200 a pound, well, they should buy $82 uranium then, because that would be a very good deal, wouldn't it?
Yeah, definitely. What about the material available? Is there enough material for trading if we see 2 or 3 big buyers coming on the market and looking for a larger quantity? Would that be a problem to carry that kind of trade?
Well, and that's the interesting thing about the entrance of the investor into the physical uranium market via vehicles. I say vehicles because SPUT is a vehicle. It's an ETF that was supported by Sprott that creates the opportunity for the investor to find their way into the uranium market. We also had a lot of junior miners raise some capital, and the raising of capital in the private equity world, or even sometimes in public equity, what they did was they raised money and bought physical uranium at much lower prices. A lot of them all entered at the same time, and when uranium was underpriced, clearly underpriced, even the nuclear power plants also knew it was underpriced at $26 a pound. They knew that it should be higher. They are not in the business to help the producers of uranium make money. They're in the business of buying as efficiently priced uranium as they possibly can when they need it or when they're required to buy it. So they had no obligation to help or the marketplace, which was kind of sick. It was unhealthy. So it was too inexpensive. So it took the capital markets, the investor community, to actually lend a helping hand to the industry to bring on further production. SPUT had bought about, well, I think they have about 65.5 million pounds of uranium right now. Well, that's a lot of uranium. That's approximately half or just under half of the annual consumption that we have in the world. And that's a lot of uranium consumed. And the buyers of that uranium are early days. It was people who understood the uranium business a lot better than some of the investors that are buying at these or at the higher prices when, for example, it was trading at 106, and the SPUT was converting their shares or distributing more shares, raising cash to buy more uranium at those higher prices because the investors were under the belief that uranium was going to go higher than 106, 105, 104. So a lot of people came in through the investor world in order to buy uranium, and SPUT created the vehicle for them to do so. Now, we talked about this prior to this talk right now, where there is a universe out there that speaks of uranium. It's in Twitter, well, X. It's in Reddit. There's certainly a large community of people. I live in Greenwich, Connecticut. Greenwich, Connecticut is often referred to as Hedge Fund Alley. We've got many hedge funds here, and many of the neighborhood social events that I find myself in, because people know that I'm very involved in uranium, that they've come to me and talked to me about uranium, where in the past there would be no mention or discussion. They found it intriguing that I was in this obscure metal that nobody is involved in, but now they're actually involved in it. They have positions in it, massive positions in it in some cases, and a lot of them are very bullish. So basically, their bullishness doesn't necessarily mean we're at the point where the production needs to have higher prices in order to meet the demands of the nuclear power plants. So it's very interesting where the bullishness is coming from. But I'll tell you what, in the spot market, we'll find out where supply meets demand and make sure that it's fairly priced.
Yeah, that's a good point. Agreed. Joe, you mentioned SPUT, you mentioned utilities. My question is, who is running the show today on the spot market? The utilities or traders?
It's a combination of everybody, because what you have is you have a lot of the junior miners that are long uranium because they bought it when it was $30 a pound, $35 a pound, because they knew it was very inexpensive then. There's other investors who have been buying continuously, and they also have a long position, and they could sell uranium or buy more uranium. We have the occasional nuclear power plant that calls us up or deals bilaterally with a producer or a trader and does a transaction. We've had, just within this week, we had nuclear power plants buying, we've had traders buying, we've had investors buying, and we even had a nuclear power plant offering at one point, and I guess they overbought. And we have producers that were offering. So the spot market is an aggregation of all the participants, not one way or the other way. The buyers are not all utilities. The sellers, in the example I just made, are not all utilities. The buyers are not all producers, and the sellers are not all producers. It's a mix of everybody. We have some converters who are on the sales side of the market. We have enrichers who are on the sales side and the buy side of the market. So it's really a marketplace of all participants. We, as Uranium Markets, reach out to the entire community. Everyone who has the ability to buy or sell uranium, we reach out to them to find out if this oscillating market is something that they're interested in. If $82 a pound is cheap for them, whether they're a converter, an enricher, whether they're a producer or a consumer or an investor, then they'll have an opportunity to buy at $82 if that's what they want to do. So we check out what their intentions are. We have a level of confidentiality where if they're interested in buying something, they give us sometimes a level or sometimes a description of what they're trying to buy, when they're trying to buy it. And we try to facilitate their needs. If the price goes down, we match the sellers with the buyers. Or if the price goes up, we match the sellers with the buyers. So we have everyone who can buy or sell physical uranium participating in our marketplace.
Okay, Joe, can you talk more about quantities in the last, let's say, 3 or 4 months? Was it pretty thin in the last in that period? Uranium traded in that period, or would you say it's pretty normal for this period of the year?
This period of the year is quite quiet, but I do say we've been more active and more busy because of the volatility inherently with the price movement over the last couple of years. We've been more busy this summer than most summers. A lot of times, the uranium markets like to use any excuse to go on vacation during the summer, and we certainly enjoy when one country has a holiday or one region has a holiday. Oftentimes, more than not, the rest of the regions like to respect and acknowledge that holiday as well. So
Yeah.
we tend to take it in our uranium world. So so we tend to do that. So, but this year it's been a little bit different. We've been busier. And I do say, though, one thing that makes it less busy for us, even though I'm telling you it's busier because of people needing to know more information, is what we talked about earlier about the actual cost of transaction. At $25 a pound, which we were at for a long time, it was $2.5 million to buy 100,000 pounds. Now it's according to today's transaction, $8.2 million, which makes the commitment of the trade, especially on the speculative side of things, a little less frequent.
Yeah. Joe, how are the utilities look at today's price of uranium? I believe that when uranium was more than $100, let's say they were not 100% happy. Of course, it's a tiny portion of their cycle. I understand that. But what is their take on today's price of, let's say, $82, $83, $84?
Well, what we try to describe to them is that we have range trades and we have lower lows and higher highs, and we have to do some analytics. We help them from the financial end because I've been in the financial business now, uranium business for only 15 years, but the financial business for 40 years. And I've been managing or monitoring markets for all 40 of those years. So there's a lot of factors which kick in to make a market go up and a market go down, and something has oftentimes have nothing to do with the news. So a lot of these nuclear procurement gentlemen, ladies, what they tend to do is they want to know when the low price is going to be so they can be involved in the purchasing at the low price. So they're looking at range trades. They understand $82 might or might not be the low point of a range. But as far as they're evaluated by management, if they buy at $82 and the previous week it was at $86 and the following week it was at $89, then their $82 purchase was a good purchase. Sometimes their internal analytics believe that $82 might be too high, so they think maybe $70 would be a better price. But they also have to understand that things have to be achievable. So we argue with them all the time, where even though they might or might not believe that $70 is a better price, which is probably a cheaper price for them, or definitely a cheaper price for them, but might not be achievable. So we help them understand where the end of the troughs are, the peaks are, and so they're not sure where they are at this point, because many years ago, when we were at 20-something dollars a pound, I spent a lot of time trying to convince nuclear power plants. They often thought I was self-serving because it would make more deals for me to buy all their future needs at $25 a pound, because it was under the cost of production considerably.
Yeah.
But their answer often was, well, if I paid $25 a pound for all future production, and of course escalated somewhat into the future, and it went down to $20 a pound, I wouldn't look very good to my management, where I could have bought all future production for $20 a pound, which was even more inexpensive, or even more under the cost of production. So it's unique discussions we have with our nuclear power plants, and their point of view, their perspective is quite different than others. Also, we have a lot of regulated customers as well, which, as long as they buy within the requirements of the actual price and they bought responsibly, they can pass those costs off to their consumer.
Yeah. Joe, what are you seeing and hearing when it comes to term market?
Say it again, the what market?
Sorry, what are you seeing and hearing when it comes to long-term market, uranium
long-term market? Well, it's interesting because there are less RFPs out than it has been in the past for requests for proposals for long-term delivery. That often tells me that the nuclear power plants believe that the price might come off to some degree. Many people from certainly the mining side or the investor side feel that that's not the case. They feel within a couple of years from now, there's going to be a shortage of uranium, which could cause prices to go considerably higher. So the utilities have to make a decision on what they want to do. And the absence of RFPs tells me that generally they believe the price will come off. And the utilities basically do run the market. They are the consumer. They are the really only true consumer. Everyone else just holds uranium for a little while. The nuclear power plants are the ones that actually burn it and use it. Investors hold on to it, and hopefully they could sell it for more money. But it's the nuclear power plants ultimately drive this market. And if they're consuming uranium along the way to make sure they always have enough to be able to change out their fuel rods and keep the machine running, then they're fine. So, but if they find it being cheap again or fairly priced, they'll be more aggressive in coming to market. So as time goes by, if they're irresponsible, then they'll put out more RFPs if the price remains higher or even goes higher. If they're responsible on their consumption, which I believe most of them are quite considerable on their acquisitions, or smart about their acquisitions, then they'll be able to keep the power plants going.
Yeah. What about ceiling and floor prices? We are hearing like ceiling prices around $135 and floor prices around $70. Would you say this is a good indicator for future uranium price?
Well, I'll tell you what, those negotiations are often confidential, and we don't deal ourselves. We deal in absolute price. We don't deal in market-related caps and floors, because that's a negotiation bilaterally between a seller and a buyer, in most cases a nuclear power plant. So we hear that they're negotiating where if the price is running up and the nuclear power plants, they certainly will understand that a cap has to exist if they want a floor. Or vice versa, if they want a floor, they want to make sure the cap exists. So the negotiations are fair. The higher the price goes, the higher, of course, the cap goes, and the lower the price goes, the lower the floor goes, the lower the cap goes, because they follow the price in some surrounding number. So that's not really our business, so we can't really comment on that.
Okay, I understand. When do you see the demand going up sharply in the future for uranium?
You say that as if it's an absolute. There's some analytics that, as I said, I don't do the analytics. I just listen to everyone else's analytics and try to figure out what the general consensus is for everybody. But there are some very intelligent, really good people who are telling me that in 2 years from now, there's going to be a big shortage of uranium. And there are also some very intelligent, responsible people on the consumption side who feel that there'll be enough production in order to meet their consumption needs going forward. So therefore, we will have a market, because we have different views on whether we're definitely going to go sharply up or not. You asked that question as if it's definitely going to happen. I'm not sure it's definitely going to happen, nor am I saying it's not going to happen. But basically, right now, if you truly believe, like you phrased the question right now, when is it going to go up? Then investors like you and others should be buying uranium and uranium stocks right now. If you're like me and you're not sure where it's going to go because you have conflicting views, then this is the price of uranium. This is the price of the equities that support that production in the uranium world.
Fair enough, Joe. Fair enough. That was my last question. Please, Joe, how can investors reach out to you and become your premium subscribers?
Well, anybody who feels that we have not reached out to them, who buys and sell uranium, and they would like to buy and sell uranium in a forum that creates fair value, fair pricing. So you won't, if you're buying, you won't overpay. If you're selling, you won't undersell, because we don't. Oftentimes, people early on, or new people, new clients ask me, "Can you get me cheap uranium?" Well, I'm sorry, I cannot do that. They said, and on the production side, "Joe, can you sell expensive uranium for me?" I'm sorry, I can't do that either. What I do is I match the fair price of uranium. They negotiate in, it might be, this morning we had an 81 bid and an 83 offer. Guess where we ended the trade? Somewhere in between, right in the middle, just so happens this time. But basically, that's what we do. So to contact me, my phone number is 203-536-0025. You can call me 24/7, and I'll be able to help facilitate you to do your uranium business. If you're trying to gather information, we have Joe Jr. Joe Jr., come over here into the screen and give out your information. Yeah. Joe Jr. will help folks who might be interested in hearing a little more about the market because they're not sure they want to buy or sell yet. Come on over, Joe. Give your phone number as well. Here's Joe Jr.
Phone number is 203-536-4036.
And if you want to call up and just talk about the possibilities of buying and selling uranium, Joe's your man. He'll give you that information.